Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in and see what's going on. If you want to follow me at _finance, and if you want to join our community, finding-value.com, where I dive deeper into all these potential investment opportunities and sharing them all within the community. We do have a special going on. Special is the coupon code for both the monthly and yearly membership. So coming in, we've got Ian McMillan, we've got Toast, and we've got a double bottom, breakout of that double bottom, retest of the double bottom. This is, quote, your ideal entry point for technical analysis books, and then you get a rip and a break higher. So this is a bullish formation. It's ready to go higher for TOST. And I was just looking at his spot here, his profile. He's posting a lot of different ones. Bullish setup for Cortiva, bullish setup for IBM. He's got a whole bunch of bullish setups, new 10x. This looks like it wants to break higher. T2, Take-Two Interactive Software, Mosaic Company breaking higher. And then there's that TOST. Monster Beverage Corp is breaking to the upside. Most everything is breaking to the upside. So when you start to see a bunch of different things breaking to the upside, one of the things that you want to think about is, well, maybe we're going to get a bullish move ahead of us. And that's what I think it could be a potential likelihood. I know Bissett wants to hold interest rates, the 10-year yield, down below 4.5%. We've had some tweets about him saying something on the lines of that. If they're successful at doing that, you might start to see money flows move back into some of these stocks again. And he's propping up the stock market while holding down interest rates. If liquidity comes into the system through bond buying or quantitative easing or stealth quantitative easing, if they don't want people to know about it, if liquidity comes into the system and they hold interest rates down, you'll probably see everything go up. So that is a possibility. And a lot of the charts look very good for that outcome to occur. Reverse repo. So this is the Federal Reserve's reverse repo facility is plummeting. QE and money printing will start aggressively when this drains to zero. Bitcoin will explode, in his opinion. Reverse repo, it's coming on down, and I think this is liquidity coming into the market. So I have in the next one or two coming on up, M2 money supply. So the thing to keep in mind is around 2023, this started to decline quite rapidly. So here's the M2 money supply. It says M2 money supply has now been expanding at 4.1% after reaching its deepest contraction in 65 years. This is very constructive for the stock market. So this has come on back, but keep in mind the liquidity was coming from here. So they filled the coffer, so to speak, and then they drained it back down into 2025. And then this is when this started to kick back up, is when this started to slow down on the right-hand side here in 2024. So I think they're just doing a balancing act between the M2 money supply expanding and taking from the reverse repo here. So this decline wasn't really a decline because it was coming from the reverse repo here. Liquidity was, and maybe still is a little bit. Lobo says, someone was just telling me that SMRs are going to increase uranium demand in the next 2 to 3 years. Well, I'm a big fan, but I try to keep things real. So this is the first SMR in North America to be operational in 5 years. SMRs which offer lower costs, smaller footprints, and faster build times. Well, what Kevin says in his response is SMR reactor orders, even if 5 years out, should result in U308 contracting nearly at the same time as the SMR reactor is placed. The reason is buyers will want security of supply and be able to consider the full cost of construction and operation for budgeting financial models. 10 years of locked-in fuel contracts would be typical for new reactors. At minimum, contracts would need to be placed within 1 year or so, 3 to 4 years before commissioning, due to timeline to receive the U3O8, convert, enrich, and fuel fabricate. Uranium contracting is all about expectations for the next decade. Once fuel buyers start having concerns about rising prices or question the certainty of supply, they aggressively move to contract. Not only will fuel buyers for utilities get aggressive, but SMR builders will likely look to get locked-in supply agreements because due to fear of difficulty selling reactors if fuel is a risk for the buyer. So even though they might be out a few years, even 5 years for SMRs, you might see immediate demand for uranium for those reactors on contract, perhaps, is what he's saying. Here's another one from J.C. Peretz. He says, of all 11 sectors, industrials are the closest to new all-time highs. Interestingly, industrials are the sector that historically has the highest positive correlation with the S&P 500 of all S&P sectors. This is a diversified index with the largest weighting being only 5% of General Electric. That looks like a bullish formation, guys. So you get this kind of slowdown or consolidation. It broke through that in a breakout. We had another break, retest, and we're slingshotting higher, falling below this resistance support level. So that looks bullish. I can't find too many bearish charts outside of people talking about bearish narratives. There is a rising wedge, so we can go to the S&P 500, and some people are talking about a rising wedge that is developed on this side here, where they are watching a potential rising wedge. But the way that I kind of look at this, I mean, it could be one, yep, as we come on up, but yeah, I'm going to wait and see. There's a lot of bullish candlesticks through here. There's not much selling pressure. We could add volume to it, and I'm sure the volume isn't stellar. So we had decent volume at the beginning of this turn, but the volume coming on up, it's not horrible. It's not bad either, though. So some people say, oh, the volume's not that good. I don't know about that. You could throw this, could be a potential double bottom, breakout, retest, working its way on up. It looks pretty bullish to me, but we'll see. And with all the other charts that we're looking at, like all these other ones, they all look bullish to me. So everything looks kind of bullish at this current time. Willem Middelkoop says you can still buy low, which is the commodity to equity ratio versus the US dollar, and it's incredibly low compared to history. The last commodity bull market was way back here in the 60s and 70s where it bottomed, came on up, bottomed in 85, 87, had another good run. It bottomed again in 99, had a nice good run. And I think we've bottomed and we're doing kind of like a shoulder head shoulder. We're at a very low level. Now, are we at the absolute top for the tech bubble? I don't know. We might have more to go. Maybe there's a little bit more left in the tank. Maybe commodities have to grind out sideways for a little bit longer. No one knows those answers. No one knows exactly when it will turn and when it will bust. Some people think that the tech boom is going to go up a little bit more and then bust, and commodities come back down with it. I'm not sure what's necessarily going to happen, but I'll tell you this. One thing to avoid problems is to avoid overvaluation. One good thing to do is to buy undervaluation. And as long as you buy undervaluation and you kind of just look through the markets and continue to buy undervaluation, buy when there's fear in the market, that's the best time to make money. The people who try to time the short term, a lot of them have been unsuccessful. So a lot of my holdings are all in these undervalued sectors that I'm going to ride on up where I think we're going to get a large commodity bull market. I think it's going to be really big. Now, a lot of people are going to ask when. I don't know exactly when. I never claimed to know exactly when something will go. What I will say is everything looks bullish. Everything is turning around for the commodity companies. They're making more money. They're buying back shares. They're doing things that you're supposed to be doing when your stock price is undervalued. Will we have to ride through some volatility? I'm sure we will, in a bunch of different sectors. Here's Paulo Macro. He says, wow, the gaslighting whataboutisms is 100% across the board now. He said, some argue that tariffs are a tax on the American people and will be inflationary. By that logic, cutting taxes should be deflationary. Let's pass at POTAS one big beautiful bill, lower the burden on working families and businesses, and drive economic growth. Yeah, I don't know if that's 100% right. By that logic, cutting taxes would be deflationary. Um, I don't know why they're using the word deflationary and inflationary and cutting taxes and who's pays for what. Like this doesn't make any sense. Inflation and deflation deals with what we were looking at up here with the M2 money supply and liquidity and money coming into the system. That is inflation. Now, prices in the system, when you look at the system like he's saying here, you can have prices go up, but that's not inflation. Inflation is money coming into the system. Prices are a symptom of inflation, not the end all be all measurement of it. I think a lot of people have that confused. So the consumer price index was created so that they could manipulate prices in the system. Inflation is the increase of the money supply. That works its way through the system and results in higher prices depending on how much inflation comes into the system. So it's a balancing act between money creation and GDP growth. And what they did is they took a lot of this out of question and they can manipulate the numbers. They can manipulate prices, but they cannot manipulate the M2 money supply. So what they did is they took everyone from focusing on the M2 and forced them to look at prices. And prices are things that they can manipulate through hedonic adjustments, substitutions, and all these other things. What he is saying here is he sets up an argument. Some argue that tariffs are a tax on the American people and will be inflationary. By that logic, cutting taxes should be deflationary. He says nothing. Some argue that tariffs are a tax on the American people. Now, the opinion is that they are inflationary. So how about we just say tariffs are a tax on American people and then leave the rest of it out? He's trying to push a statement and confuse people. That's what he's trying to do. Usually, cutting taxes is good for those that are making crap in society. U.S. consumer sentiment is at depression levels. The University of Michigan consumer sentiment fell to 52.2 points, the second lowest in history. Expectations fell to 46.5, the lowest in 45 years. Not even the biggest recession since the Great Depression saw such a low level. And this is the University of Michigan Consumer Sentiment Index. Now, here's my question. If you're a bear will look at this chart and say, oh my God, we have this gigantic depression pullback. A bull looks at it and says, oh my God, this is a double bottom. We bottomed here in 2022, and we have a double bottom occurring in 2025. I should be buying. I'm in the second camp. I'm a bull that looks at this when it gets low, and I would buy at these lows in each and every single one of them. Another thing this looks very similar to, if you look at these pattern here, they almost all have these double bottoms. This was the ultimate double bottom in 1980. It came up and came and bottomed again in like 82. Here's another double bottom. It bottomed in 2008 and 9, came up and bottomed again shortly in 2011 or 12, whenever that is. And then we started rocketing higher again. So it's almost like we've got the same deal going on, a double bottom. Double bottom, double bottom. And this one was more like a shoulder, head, shoulder, kind of an inverted head, shoulder, head, shoulder. So I look at it as bullish, as weird as that sounds. Here's a Bitcoin. He says, we print money out of thin air, lend it to you with interest, then tax you for using it, and you spend your life trying to keep up. And this says, F this Bitcoin shirt. And this is maybe a politician and or the Federal Reserve or something like that. The other thing that I look at it is that physical precious metals is a better play than this because they can see every transaction that anyone does using that network. You also have to get it somehow out of the system. So you get into the system and then you have to use on ramps and off ramps to get out of it if you want it to transfer out of the system. I think they can control that. They can see who's doing what transactions. They know that you've transacted it and they're going to probably tax it to death, perhaps. Or they'll do stuff with the on ramps and off ramps. They'll regulate it or stop it or freeze it or something. Gold and silver, they can't do anything with it. You're out in the free world. You're out of the matrix. All this other stuff is in the matrix. Bitcoin is in the matrix. I want to be out of the matrix. How do you escape the matrix, so to speak? Here is Uganda discovered gold deposits worth more than 12 trillion USD. Your thoughts on this? Completely false. Why are we getting these stupid things coming out like this? Are they trying to push the price of gold down? Uh-huh. Lawrence McDonald says at 38 times earnings, it's time to eat some tariffs. So the U.S. Treasury Secretary is calling private companies and telling them what prices to set or not set. Seems like capitalism to me. Sarcasm. Vicente spoke on the phone with Walmart CEO. Yeah, that is crazy. It is a little crazy. High Heat says oil completed a double bottom 2 weeks ago. Enjoy the ride. Hey, I agree. Hopefully that double bottom holds and we start moving. Fingers crossed. But we'll see. Again, a lot of people, they try to predict what the future holds. I'm in the camp that it's like, man, the short term here is really tough. I'm not saying that making short term predictions are ever really easy, but keep your side on the right side, which is buying value. If you buy value, you hold on, you'll be on the right side eventually. Part-time trader, the bond market is in trouble. Deficits run at record levels and rates cannot be brought down without destroying demand for government debt. Interest payments are one of the biggest line items on the national budgets. The market will reset, equities and crypto are going to suffer, in his opinion. And that's what I don't know what's going to happen here. A lot of people are making these bets where we're going to see a large decline in the stock market, a large decline in tech stocks and Bitcoin. But on the other hand, what has countries done when their debt gets very big? They print money. And did those stock markets go down when they print a bunch of money? No, they went up. So that's the big question mark. You've got the fiscal spending and the interest payments rocketing higher. And people are looking at this saying, well, the prices are going to go down because interest rates are going to go up. It's like, well, interest rates going up is inflationary because they're going to print money to cover it. So then you're stuck in this loop. Like, how do they stop printing a buttload of money? I don't know. I don't think they can stop. I think they have to keep printing and printing and printing. And that's the pump. The pump is the print. So we could see Bitcoin and tech maybe go up, but maybe the things that people need will go up faster. So maybe the ratio will correct itself of commodities to equities. Equities go up, but commodities do a moonshot. and they go up because that's what people need. People don't need Netflix, but they need to get to work and buy energy. They need to eat. They need to house themselves. Well, most people do at least, unless you want to go without a house. But that's kind of what I think might come. Charlie says the University of Michigan Consumer Sentiment Index has fallen to 50.8, the second lowest reading in the survey's history, which goes back to 1952. Yeah, there's the double bottom. Second lowest reading ever. Maybe it goes down a little more. Who knows? But there's CCJ, Faith of Cameco. And I was just looking at this, trying to look at the current fractal and compare it to the fractals back here and where we're located. It's a tough read. But here's one thing I can say. It looks like a potential resistance spot where we're at. And we want to break through that resistance and get on top of it. That'd be a completely bullish formation if we can break through this resistance here and get on top of it. Completely agree with that. Now, when I look back, where is this location? Maybe this location is here or here. It's hard to say. We made the turn here. This was kind of the turn here. So maybe this first one there is this guy here in early 2000s. Or maybe we're even before that. Maybe this spot is actually like right in here, where we might get a little bit of a pullback like we've been seeing in a market slowdown. But, it doesn't have to match this back here. Some people think that this is wave one, this is wave two, and that wave three is started, and we are in the first, perhaps, wave of wave three. Maybe that's the case for Elliott wave people, but either way, we want to get above this resistance, get on top of the of resistance, now support, and rip. This is Iranian crude oil production hit a new multi-year high since the 2018 sanction enforcement. Maximum pressure, my butt. There's Iran crude supply, pretty high. That's not low. So here's another thing. A lot of people think that there's all this spare capacity. Where is it? Outside of Saudi Arabia, where is the spare capacity? Does Iran look like they've got a bunch of spare capacity? It looks like they're going full out. Well, we'll see. Just in another failed U.S. bond auction this week, people are starting to get worried. This is the quiet potential QE that they're doing and liquidity coming into the market. The U.S. Federal Reserve just pulled off something stealthy. Over 4 days last week, without fanfare, the Fed vacuumed up $43.6 billion in U.S. Treasuries. That's $8.8 billion in long-dated 30-year bonds on May 8th alone, plus another $34.8 billion earlier in the week. Not exactly small change. They're in there buying. That adds liquidity. Liquidity. Boom. That's where it's coming from. And you want to go watch the M2 money supply, see if that thing's going up. The NASDAQ, after the releases of Netscape versus ChatGPT, continues to track eerily closely. Bullish should hope the trend remains because we're still in 1997 on this analog, so to speak, if he's trying to match up the fractal, in his opinion. So we're still very early in this move, and that's what they've got there for a potential move higher. We'll see if that occurs. But a lot of charts do look bullish. They do. Seth Golden says I've already went over this one here. So we're going to end it there, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Use special coupon code. We've got the Q&A session that's been uploaded to the website. So go check it out if you weren't able to attend the Q&A session on Sunday. And that's all I've got. So we'll catch you next time. This is Finding Value.